Welcome back to another live stream, except this is another one of those early live streams that we do because we get a data release, like CPI. Today we are going to get the CPI data release. In fact, we're going to get it in about 9 minutes, and as much as many of us hate it, the market does move off of this data. We are expecting the year-over-year data to come in between 3.5 to 3.6%, which is really high. We haven't seen numbers like that in a very, very long time. But that is because we are comparing to a whole in last year's chart. So I'll show you exactly how that's calculated really quick. And you can sort of look at it yourself and see, okay, that's why that year-over-year number looks that way, which I think is very useful. This will go pretty fast. And then we'll talk about what's more important, which is the month-over-month figure. And by then, well, you should have the data. So we'll also look at the pre-market in just a moment, kind of see how things are getting started. So let's do a quick peek here, okay? So here you go. Here's the whole of last year. And so what you can see is as the CPI reading fell in the pandemic, we experienced this little hole. And we kind of V-shaped recovered and went back here. But lately, we've had this sort of inflection point up where you've kind of seen inflation speed up a little bit. And what we're worried about is really the slope of this line right here. The year-over-year figure is going to compare probably a number like, I don't know, let's say we have a number like, let's say this number's been going up by about 0.8 every month, with the exception of here where it went up by about 1.6. Let's say it goes up 1.6 again on the CPI data here, which right now is at 2648. All right, 264.8. Add 1.7. We'll go in the middle here. 1.7. So you get 266. And then what you could do is take April's number here of 256 and divide that by 266. So let's try that. 266 divided by 256. And that in that case, if it were that extreme on a month-to-month, we would have year-to-year inflation readings of 3.9%. Now, we don't actually expect 3.9%. We expect this number to come in at 3.6%, but it kind of goes to show you a little bit how we get this this calculation, which is useful for knowing. And we're going to see in about 7 minutes what this year-over-year number comes in at. And we're also going to, most importantly, see what the month-over-month data looks like. And that's what we really care about here. So we want to see what this number here grows to. Is this 264 going to turn into 266, 255, something, whatever. And the way we're going to measure that is with the month-over-month inflation reading percentage-wise. And so from February to March, we had 0.5%. If it's around 0.5% again, that keeps us on the same slope. If it's less than 0.5%, that would be a sign of inflation slowing. And if it's more than 0.5%, that would be a sign of this slope increasing. What this market is going to look for is anything that is either stable or slowing. Unfortunately, I don't know that we're going to get anything stable or slowing, especially since in April, we probably had more of our stimulus checks getting spent. But on the flip side, it usually takes companies a while to start raising prices. Now, we like to say, oh, inflation will come and then and the prices will just go up. Not necessarily. Sometimes it could take a while. There could be a real lag time between when companies start experiencing inflation and when they start raising prices for their people. Usually they do it slowly, or they try to do it in more hidden ways, like changing packaging sizing, so that way it doesn't feel so apparent that pricing is going up, but it does still get caught by the CPI. So it'll be exciting if we get a steady inflation rate from what we had last month, or if we get a steady or slowing would probably, I think, be better for the market. So that's what we're going to look for. We're really going to want to look for that month-over-month data to be, gosh, if it comes in at like 0.3% or like 0.4%, that's going to be in that better direction. If it comes in month-over-month and it's like 1% or 1.2%, and we see that big inflation reading, people are going to freak. So we'll see. We'll see. And it also depends. I mean, a lot may have gotten priced in yesterday. I mean, the market's up. The market obviously turned up yesterday. It turned up substantially yesterday. I mean, yesterday morning we were in a big hole. But we do have some big movers this morning as well. I mean, look at this. Upstart up 24% in the pre-market, back to 111. This obviously has fallen substantially. It fell to the 90s, substantially down from where it was trading when it was really being used as like a day trade in the 120s and 110s. It even ran up past 130. Fibonacci TV here, 22%. Sundial's up 5%. Unity's up 5%. Open Doors up 4.4%. A lot of earnings pushing these guys here. Palantir yesterday was up 9.4%, up another 3% here in the pre-market. Really, really nice to see. We got Lemonade actually down 7%. So they reported earnings yesterday. So it looks like probably a miss here on Lemonade. They're down to 68%. We'll have to pull up the earnings for that a little later. PaySafe down 3%. Naked down 3% ish, 3.5% here. Canoe, Zom, Playboy. These guys all moving down in that 3% range here. So it'll be fascinating. Here's Tesla at 612, down about 0.75%. All right. So we are getting ready. In about 2.5 minutes, we will have this data release. We'll also have CNBC up. Looks like they're talking about SPAC mania meltdown. Let's give this a listen here.
For consumers, I'm sure you've bought and sold a home before. It's really hard to do, particularly in this market where it's a seller's market. It's hard to be a buyer. We're helping knit both those sides of the transaction together.
Carrie, I hope to have you back so we can talk more about the business itself. I know we had.
All right, pull off this. Yeah, so we're on standby. Yeah, all right. Let's see how it goes. Classic California. All right. So we've got, I don't know, 2 minutes, and I guess I'm gonna write down what I think. All right. So, and I've written this down in the past before, and it'd be good for you to also have a screenshot of these dates. If you haven't gotten these dates yet, I'd encourage you to write these down. So let's see here. It's like a little HDMI disconnected here. Look at this. There we go. All right, folks. Write down these dates. So just really screenshot these dates here. So April 12th, that's today. I expect we'll have bad inflation readings this month, especially on the year over year. The month over month is up in the air. But I expect bad May 12th for April, June 10th for May. In this green section here, that's when I start expecting improvement. Not greatness, just some improvement is what when I would start expecting to see that slope go down again. Remember what we had here? This slope right here. See that kind of slope right here? We want to see that start inflecting down. It inflected up. We want to see. All right. So let's. We are 1 minute away. We got CNBC up. That's me. All right, we'll have this up. I will have a sheet up here as well. We'll do it on the computer. All right, so CPI. We'll see what happens. Okay. Oh, yeah, I'm going to write down, okay? It comes out in about 20 seconds. So I'm thinking, I'm hoping for 0.5 on month over month and I'll go with 3.5, 3.6. I'll go with 3.6 on the year over year. Okay. All right. Write down your number. 3.6 on the year over year, 0.5 on the month to month. See what happens. Okay. Here it is. Let's see. It's not out yet. Not yet. I'm waiting for it. You always get so anxious. Well, I do. You're going to see the market move. Well, I mean, oh, here it is. 0.8. Oh, month over month comes in higher. Oh, there it is. 0.8 in April on a seasonally adjusted basis after rising 0.6 in March. That's definitely a beat. Oh man, look, the over the last 12 months, all items increased 4.2%, comes in worse than expected, way worse than expected. 4.2, that's a headline number right there. This is the largest 12-month increase since the 4.9% increase for the period ending September 2008. That's not good. The index for cars and used trucks rose 10% in April. This was the largest one-month increase since the series began in 1953. Cars and used trucks destroying it. And it accounted for over a third of the seasonally adjusted items. Cars destroyed it. The food index increased 0.4%, and the indices for food at home and food away from home both increased. Energy index decreased slightly with a decline for gasoline in April. Well, that's going to get absolutely destroyed this month because of the pipeline, especially if this pipeline crisis keeps going. Let's see here. The largest... okay, let's see. 0.9. Okay. The index for all items less food and energy rose 0.9% in April. That's even higher than the 0.8%. It's the largest monthly increase since April 1982. Oh, largest monthly increase since April 1982. Nearly all major components in the indices increased in April, along with the index for used cars and trucks. We've got all items rising 4.2% for the 12 months ending in April, a larger increase than the 2.6% increase for the period ending in March. Yeah, no kidding. That's a huge move. I'm going to go ahead and keep looking at this chart here. Let's listen to CNBC for a moment. I'm going to get the sticks here as well.
67,000 yesterday on openings, but hires actually declined by 6,000. So as you go through those numbers, it really starts to jump out at you. Joe, back to you.
I had a weird feeling listening to you. It was, I think I would identify it as kind of like panic. that when you actually see inflation numbers when it's been so long, Rick, I really didn't think they were possible. I didn't think it was possible, and I still don't. I think it must be transitory. But for a second, I was thinking 4%. I mean, those are
no. It's definitely here in the short term. There's no doubt about that. And we know that J-Pow knows it's gonna. And that's the thing. We know inflation is here in the short term. I mean, you look around at everything. It's here in the short term. And we're expecting these numbers to be bad, but the month over month, that's definitely a pickup above and beyond the rate that we were expecting. The month over month coming in worse than expected. What we should do is let's go ahead and look at some of the sticks here really quick, and then we can go back. Let's just see how the market is reacting to some of this. So you do have, you can see the S&P 500 here dropping on this news a little bit. We've got, let's go ahead and just pull up on a sheet here. There we go. Okay, here we go. Let's go pull up. I don't know, can we get the Dow Jones beforehand? If I type in Dow Jones stock, I should be able to get it. No, get the futures. I'll get the futures elsewhere. We'll look at the sticks over here. Webull would make it a little easier to get them. But anyway, so you can see Upstart. Upstart's still holding on to these 24% gains. Get a little bit of a drop over here. It's not, I don't see the market reacting as horribly as you would think. It's almost like the market's kind of like, no, this is what we're expecting. Tesla did drop nicely, though. Look at that. Tesla goes from like 611 to 603. So that's a nice 10 percentage point drop there, somewhere around 1.5%. You got Arc Genomics dropping on this news as well, towards the downside. Yeah, Lemonade was already down this month. What else here? Roblox dropping on this. Yeah, stock's definitely dropping on this. Square's down about 4 points. Couple percentage point drop here on the reaction. Seems to be about where we are. 1.5 to 2%. Let's go back to the actual sheet here and see if we can grab a little bit more information here. Communication rose 0.4%. Medical index rose 0.1%. The index for all items less food and energy over the past 12 months rose 3%. Really, the big shift here, as they said, accounting for a third of the increase, the big shift was cars. Look at this. The index for cars and trucks rose 10% in April, largest one-month increase since the series began in 1953. It's like literally the largest ever for cars and trucks, and accounted for a third of the increase of all items. That's crazy. So you're really not going to see these current inflation numbers go down until you see cars catch up again. Let's see, what did and here we go, new vehicles. See, new vehicles, there's just no supply right now. New vehicles up 0.5%, used cars and trucks up 10%. Apparel, which has been negative usually, or recently has been negative, was up 0.3, medical 0.6, transportation services up 2.9%. I think it was almost all. That's incredible. Gas went down, fuel oil went down. These guys went down. These guys were negative. But that just destroyed this measure right here. 10%. I mean, that's incredible. Wow. Let's listen to CNBC for a little bit more reaction. We'll get Bloomberg up as well.
The debt in the country and how it impacts a lower horsepower of growth for a long time, how it's going to hurt productivity. You know, that also gets priced into the bond market. So there is going to be a tug of war.
I think we're scouring the bushes for geezers. And I think we got a couple more to bring in here that may have seen some of the inflation in the past. Leisman and Santoli, I think, are both with us. Steve, you're looking at I said that in only the nicest way. And Mike, you were around and probably writing for Barron's at some point. This is.
Okay, we'll pull off this for a moment. I want to look at the 10-year. Take a look at this. So here's the 10-year. So this is the U.S. 10-year. This is the Treasury, which we regularly look at. Look at that jump that you have here in reaction. Go out to the 3-day. And look at that jump right here. What a jump. We went right from 1.62 to 1.645. Inflation expectations. Let's see that kind of a little bit of a bump. Oh, let's go to the 3-day here. Oh yeah, there we go. Okay, a little bit of a bump. Not actually as much. Almost kind of like the market's like, nah. We knew it was gonna be bad. We knew the top line number was gonna be really bad. But the month-over-month increase, worse than expected. But then again, I mean, a 10% increase in food. I'm sorry, a 10% increase in used cars and used trucks. Whoo! That's nutso. Let's listen to this.
Strip all of those out. Add in what we know about how much demand we have in our economy, how little supply we still have. I think this bears some caution and should change the way people are thinking about the economy.
Jason, what do you think that means for the relief package we passed just a couple of months ago when Larry Summers and others, including Olivier Blanchard, came out and said it was too big for the moment we're in? Do you think this is evidence of that?
Oh, it was definitely too big for the moment. I don't know any economy.
You know what's weird is Bitcoin's down. This is why I doubt sometimes the direct relation to inflation with Bitcoin. But look at that. It went down from here. It dropped right when the data came out. It dropped. What's up with that? It's very, very, very weird. I don't know. I guess it's not what I was expecting. All right, let's hop on back. Let's go back over here.
We increased labor supply, and the Fed is a little bit more cautious to help keep inflation anchored.
Jason, can I get your thoughts then on what happened on Friday when we saw that big miss and we talked about the supply side story and the mismatch between demand and supply, and then maybe prices would need to adjust? Arguably, as you've pointed out, we saw that in wages already, and we could see that a whole lot more in months to come. Some governors of Republican states have decided that they need to remove the additional UI, the unemployment insurance that was offered by the federal government and the package that was delivered recently. Do you think that's the right decision to fill that gap?
Yeah, so the big miss on Friday was wages. The expectation for wages was 0.0%. The actual number was 0.7%. Even that actual number understated what actually happened because of composition effects. The real number is probably more like 0.9%. Either way, that's the fastest wage growth we've had since the 1980s. So you're not looking at one isolated data point around used trucks. This is everywhere around us. If I were in a state,
commodities up. I mean, as you just mentioned, wages. It is inflation is here. There's no doubt about that. How long it'll stay, that's the debate.
To work was a good thing to continue doing.
Jason, lost for words there. Are you in agreement with Republican governors then in places like Arkansas, Iowa, Montana, South Carolina?
It depends on where you are in the virus. It depends on where you are in your unemployment rate. But certainly by June, July, August of this year, I don't think we need the same UI system we had in January. In January.
All right, we're going to pull off the unemployment talk. Let's listen in over here again.
This year, both in the 2-year, which is the average of funds rates over the 2-year period, and the 10-year. So far, I think the bond vigilantes are not winning the day. But, I mean, that could change with a bunch of reports with the sense that maybe it's not temporary. But for the moment, I think they're generally buying the temporary story.
Yeah, I don't think the Fed can contain with any amount of QE the psychological damage that the biggest end users would experience if the Fed took on a very active dynamic of higher interest rates with the world's premier sovereign in the form of treasuries.
All right, that was great. I'm glad we called you guys quickly after that number. I guess we should have known that it was probably going to be hot, but not that hot. We had a discussion earlier, Bee Gees. We can't really play any of the music, but one interesting comment, Staying Alive, which was the song of the 70s, does it not have a whole new meaning after the last year that we've seen? Staying Alive, kind of scary.
Okay, we're going to pull off that. Kyle N here says, you had a guest on before who said BTCX more like a tech than a substitute for gold. The reaction would fit that characteristic. Yep, that is true. Very, very true. You got another comment here from Steve. The only people surprised by these numbers are Fed economists. The psychology of inflation will take hold and become a self-fulfilling prophecy. This will pull demand forward. We'll see. I think for us to really pull demand forward, I think you need to have everybody thinking on the streets. That's it. Next year, everything's going to be more expensive. The year after that, things are going to be more expensive. I don't know. We'll see. So Jeremy here says, how long it will stay is irrelevant. It's the Fed's only play. They can't, I'm guessing you meant they can't hide inflation anymore. Literally, their only play is to say it's temporary. I mean, it's a pretty jaded look at it. It's pretty jaded, especially since if you look at, the past 60 years in America, we have a history of declining inflation. History is on the side of the Fed. And the Fed tells us, like, hey, expect bad numbers in the short term, right? But yeah, no, these numbers came in worse than expected. But then again, pull out, just for example, if we pull out, let's go to, just to try to understand it a little better. If we look at the CPI data, which, like I said, will move the market as much as many people don't believe it. I wonder what happens. It would be cool if they gave you like a spreadsheet. But okay, so here we go. I wonder what would happen if you got there's seasonal adjustment. If you took out, for example, the 10% vehicle movement right here. These are all there, and it's all seasonally adjusted too. So it's way too complicated for us to. But they said the move of vehicles made up more than a third. Look at that right here, just so you could see it. Right here. Okay, turn that on here. All right. Okay, Elon Musk says Tesla to roll out improved self-driving in the coming weeks. Cool. The index for used cars and trucks rose 10% in April. This accounted for the largest one-month increase. It also accounted for over a third in the seasonally adjusted increase in all items. Okay, so if you take the seasonally adjusted increase here of 4.9% and you took out a third, so 4.2 divided by third, and they said more than the third, so let's just go with 0.34 here. You take out, not divided by, there we go. You would take out about 1.42. Without the car and truck movement, you'd be at somewhere around 2.8 without cars and trucks for your annual movement. And if we're at 0.8 on the month-to-month times about a third, that would take out about 0.72. I'm sorry, minus 0.272. There we go. So that is too funny. Okay, so without cars, I'll write that down. Without cars, we would be at 0.528. and a 2.8. So 0.528 on the month to month, and on the year over year we would be at 2.8 without cars. But because of the cars, we're at 4.2 on the year over year and 0.8 on the month to month. That's interesting. And we know we have a massive car and truck shortage. We know that supply shortages with chips have shut down factories. We've heard of Ford talking about this, this lack of production that they're able to bring because of a chip shortage. Kind of makes sense. I mean, when we look at it from this point of view, the supply shortages make a lot of sense of it. Let's listen in over here. Unless they're just going to repeat what we already know.
Of 2008. Joining us now, Thomas Petterfy, chairman and founder of Interactive Brokers. We got so much to talk to you about, Thomas, but can we just talk about where we are in your view after that number we just saw in terms of inflation? And I know that if you live through that, how insidious inflation can be, and how watching bond, the prime rate at 21.5, at the same time that we had high unemployment, it was a misery index that in today's terms is almost unfathomable when you think of where inflation plus unemployment was at the same time. Is there any way we could be heading back there, or is it much too early to say that? Chairman and founder of Interactive Brokers, Thomas Petterfy.
Well, I believe you're absolutely right. We are going back there when we're looking at annualized inflation rates in the double digits, taxes rising, and so, generally we're looking at a very difficult scenario going into.
Because we've been spoiled, I think. We don't know what that does to not just equities, but just to finance.
Let's go ahead and pull off this for a moment. Take a look at this. Tesla somewhat trying to rebound here. Before the reading, we were somewhere at 611. We're at 605 now. Did hit a low of about 601. Did not get into that 500s territory. Etsy rotating down as well. Looks like a lot of things are kind of settling here, slowing down a little bit on declines. No real shift here. Let's see where else we have a shift. PaySafe, Canoe. Yeah, you see everything kind of rotated down in just the last 30 minutes here, of course. Well, 18 minutes rather. Last 18 minutes is really what you're looking at on the chart of right around from here to the downside. Does look like some things are sort of hitting that bottom. Yeah, there you go. Churchill Capital kind of hitting a little bit of a bottom here as well. What else? Towards the upside, Upstart really holding on. Upstart really barely having a movement to the downside here. Same here with Fubo TV. Pretty similar. Sundial, yeah, a little bit of some moves here, but also not much of a movement here. Unity did drop a bit, got down from about 89 to around 87. So it's almost kind of like the market saying, yeah, okay, a lot of it cars. All right, we would expect this. A little bit of an adjustment to the downside, but by no means is this a big old crash. Yeah, see, even the S&P kind of moving back up. And Bitcoin's trying to recover a little bit as well. It is moving very much like a tech play right now. Let's go ahead and listen to CBC a little bit more.
Spend on all these entitlements, and if we do $2 trillion, an additional $2 trillion, you are going to see the Fed try to, I guess, orchestrate that with money printing. Would you stay long the stock market? Is there any way that you can delay this past 1, 2, 3, 4 years, a day of reckoning?
Well, ultimately, we have to look at replacement values of companies which will rise. So ultimately, if money becomes more worth less and less, the stock prices in nominal terms will have to rise, not for all companies, but...
All right, I'm going to switch on over. I think what they're purposely going to do all day long is they're going to try to get people from like the 70s to come in here and go, that's it. We're going back to hyperinflation. We're going to 10%. Dude, take out the used car part. It's not that bad. It's kind of expected.
Whether it's the restaurant, whether it's the app, or whether it's the consumer, this is just not a cheap service.
Yeah, Jackie, jump in here. It's not a cheap service, but it's gotten a lot more expensive within the last year.
All right, let's listen to Bloomberg.
Any kind of inflation or growth or dynamics that are going to cause Treasury yields to go above 4%, unless we do something silly like talk about not paying our bills, not with some kind of default probability. Otherwise, we're likely contained in terms of yields. And Tom, I want to bring up a little fact here. Bacon prices were up 10% last month, year on year, but egg prices were down 9%. So don't worry about the price of your breakfast for now.
Very good. Ira Jersey, too short a visit. Thank you so much. And he will write this morning on what we see from Vice Chairman Clarett and, of course, off this report as well. Michael McKee is doing what Michael McKee does best, really diving into what is a wide set of data. What's the thing that sticks out? You mentioned cars, used cars, but what's the thing?
Well, a lot of it seems to be the reopening prices. We're looking at things like used cars were up 10%, as you mentioned. Car rental up 10.1%. Airfares up 10.2%.
Felt that.
Lodging, hotels and motels 7.6%. So you can understand where some of these price pressures are coming from. These are people who had no business for the past year or so, and their prices are firming up a little bit. Televisions were up 3.1% as the surveillance simulcast starts to come together.
It is. It's a national effort.
But just to follow on Ira Jersey, don't worry about breakfast. He's right about the numbers there, but do worry about your next trip to Fenway, because hot dog prices are up 2.7%. That's a large gain. And sporting event tickets up 10.1%.
All that is wisdom.
We can actually look at some of the more detailed portions of the chart here. I'll pull it up really quick. Let's do that really quick. Let's go to some of the detailed sections. There you go. Let's see where we can find this. So, okay, detail all items. Let's try that. Are we gonna get them? No, these are different areas. I want to know where they find. I want to know where the hot dogs are. Oh yeah, here we go. See, look at this. Fresh cakes and cupcakes. Okay, fresh cakes and cupcakes. Okay, up 1.3%. Sweet rolls are up, and coffee cakes are up 2.2%. Well, this is fun. Ham is up 4.3%. Pork chops up 1.8%. Fish and seafood in aggregate is down 1.4%. What are some other fun things here? Coffee itself is up 0.4% in aggregate. Look at all these crazy things here. Soups down 0.6%. Food away from home up 0.3%. Energy was down. We saw that. I wonder if they divide up used cars a bit. Let's look at this. No, they don't. See, here they show new vehicle inflation is 0.5%. New cars and trucks, 0.5%. New cars, 0.3%. New trucks, 0.6%. So trucks a little bit more inflation than when we saw at cars. For new cars. But really, it's the used car segment that really just destroyed the entire reading here, coming in at 10%. That was a killer reading right here. TVs went up. Look at that. TVs went up 3.1%. Oh, darn. I just had to buy some TVs. Now, that's it. Now I should buy more TVs because next year it's going to be more expensive. I think it's going to be really hard to convince consumers to start plowing out more money today on a single monthly increase at these levels. But we'll see. Alcoholic beverages 0.2%. Oh, good. So your alcohol is not going up that much. Car and truck rental 16.2%. My goodness. So I mean, look, people bag on the CPI, but folks, I mean, it's very interesting how they break out all of these different things. Look at this. Airline fees, 10.2%. I mean, they hit a lot of things here. You know, and then people freak out because it's like, whoa, wait a minute, you replace the type of vehicle you use with a different one. Well, yeah, I mean, over time you have to, or not type, but the model or whatever. Well, because over time models go away. I don't know. I'm not as much of a disbeliever in the CPI. I think the CPI actually does a pretty good job at telling us, and it's good for us to see this. I mean, look at that. Admission to sporting events up 10.1%. I mean, we can really see the nitty gritty here of where things are going up. Admission fees going up. That totally makes sense. We would expect that. Car and truck rental. I mean, that's crazy, 16.2%. But used cars and trucks makes up such a large portion of this reading, and that being up 10% really smacked it here. Where did they see that eggs were down? Where did you find eggs themselves? Oh, there we go. Eggs down 0.5%. That's cool. All right. Let's go jump back on over here to CNBC and see what else is being talked about. Although lately they've just been getting on people to talk about how bad inflation was in the 70s. Oh, Tesla dropped below 6. Let's go ahead and look at the sticks. Take a peek here. All right. Let's see what we got here. Tesla. Oh, yeah, look at that. Tesla was flattening here, now back into the 500 range. Awesome. I mean, that's where I want to pick up more shares, is really in the 500s. So we're right at 600 right now. We've got what else do we have here? UiPath dropping a chunk here. Pinterest dropping a chunk. But actually not as horrible as expected with the reaction in the market for what we got here. Ethereum 4,300. That's great. Bitcoin, actually dropping when the report first came out, which was also very, very bizarre. Doge at 49 cents. Not really seeing a big run up here in cryptos. Ethereum obviously doing very, very well. But let's go look back at the 10-year here. Yeah, 10-year. This is the 10-year break even. Yeah, look at that. 10-year inflation bumping up even higher now. We went from 1.62 to 1.64 to now 1.65. Another push to the upside here on inflation expectations and on treasuries. Let's go ahead and listen into CNBC for a moment.
In stride overall. First of all, we'll take a look at what's happening with the futures market and everything else that's happening on a macro perspective. If you take a look at the market reaction from a stock side of things, yes, we did see that kind of sharp spike lower here, but by about maybe 13 or so handles on that particular move in the S&P 500, we're still kind of hovering down near the lowest levels of the pre-market session for futures, but still a more muted reaction. Elsewhere in the markets, also check out what's happening with the overall kind of rate complex, if you will. The 10-year note yield did tick higher, 1.65%. We've been kind of holding right around this 1.6% mark for a good while here, so we'll see whether or not there's a move higher towards some of the highest levels that we've seen over the course of the last 2 years. Also checking in on gold prices, because we have used gold as an inflation indicator over the last several years. Gold is up about 0.25%, 1841.40 the last trade there. Still, though, you can kind of see the highest level that we've seen in months over there. And then one other place to watch is whether or not those interest rates will have an effect on technology stocks and their particular valuation concerns. So we will be watching throughout the course of the morning for some of the pre-market trades in stocks like Apple, also Microsoft, and Amazon, and Alphabet's parent company, Google, as well. Those are going to be some of those key names to watch in the pre-market, guys. You can see they're in the red so far. Joe, back over to you.
All right, Dom, thanks. Final check on the markets. Really pretty orderly. Maybe Kramer's probably right. It seemed like big numbers, but maybe not a huge surprise to everyone. In the bond, the 10-year is sort of back to
I think it's really when you dive into it, like the headline feels really bad, but when you dive into it, it's not as toxic, in my opinion. And so I just feel free to like retweet this if you want. I mean, I always love your support when you do. But I just tweeted this on Twitter, and I think it's very valid. If you remove used cars and trucks, which are destroyed due to chip shortages and up 10%, inflation readings today would have been 2.8% year over year and 0.53% month over month. This would have been better than expected, but used cars ruined it. 0.42% year over year, 0.8% month over month. Inflation won't go away until we fix supply chain shortages. Still thinking we're in for rough rides until we see the improvement in September and October, hopefully. I still think that, and I say it like every day. Every day I'm like, look, if you're buying right now, it could get worse through September and October. We don't know when it'll start recovering, but what we're waiting for is that improvement. We're in the middle of the crap right now, and we knew we were walking into crap. And now we're in the middle of the crap. So now it's a matter of surviving through the crap, and then we'll see when things U-turn. In the meantime, it does look like we might get some opportunities. Let's see. I want us to take a look at let's see, Churchill Capital sitting at almost down about 3% here. Enphase almost about 3%. Etsy. You know what makes me happy is it's everything. It's like it's all of the tech and the consumer discretionaries. It's not, that's the best kind of sell-off to have. I think the worst kind of feeling is when a company like reports earnings and misses, and it's only that company that sells off. When it's all of the companies in a sector that are selling off, it's a sectoral rotation, and it's not like you made a bad pick. It's just your sector's on fire and sucking. And by fire, I mean bad. It's melting. All right. So let's see what else we have. Let's listen to Kramer for a moment.
The unemployment benefits, the no tariff, taking down the tariff on lumber, which is a ridiculous thing. The president could just call Trudeau and say, listen, we're done with that. You can flood us with lumber and
That's
we'll cut that
Canadian
in half.
lumber we should
yes,
which is it's some time back now that tariff was put in place. Yeah,
we get the we wait for the copper mines to be able to open. It is difficult to take the food complex down, but we know from Tyson Foods that their margin can go down, and therefore there can be a lowering of price at the supermarket. So each one has a tail.
Yeah.
And one of the tails has to break before this stops.
And the conversation we've been having at this desk now for weeks is the one that's been the market largely speaking has been having as well, Jim, which is whether this is, as you continue to believe, transitory in nature, and as the Fed certainly seems to believe with some unanimity, or whether it's here to stay. 1981, biggest CPI, 1981. Even you kind of gasped when you heard
1981 was when Volcker had to do it. Came to terms with it, and you had to buy those U.S. Treasuries at 14%. And David, the one thing I would say, and I think it's important, is that people at home have to understand what happens to stocks. There's a very fine company called Unity Software. It's a Woodstock, at the letter U, not US Air. And what's interesting about it is that the revenues, it's a revenue. I mean, we call it a pre-earning stock.
Okay.
The revenues are up big.
Yep.
And the price to sales, which is how the stock is measured, has shrunk dramatically from where it was. So there was a feeling that perhaps if with the revenue upside from last night's quarter, which you got, or you could substitute Roblox, but today's Unity, if we didn't have inflation, the stock would be up big.
Right.
But instead, the pressure is on the price to sales multiple, and people don't want to pay 16. They don't want to pay 18. They don't want to pay 10. They tend to want to pay 7. And that's why a stock like Unity could have a much better than expected quarter. People
and
sell.
not get the reception. And that's reflective of what's going on in this market, at least these last few days, in terms of those high multiple stocks, as you point out, that are even pre-earnings, but are dealing with multiples to revenues here that have been high flyers.
The Virgin Galactic.
The reason that Kathy Wood's ARK funds did so incredibly well was last year.
Inflation.
Yeah.
And I would tell you, Carl.
No, it wasn't inflation.
No, there was no inflation.
Right, there
so
was no inflation.
I would tell you, Carl, that the ones that are most damaging that I think people see are the pre-sales names like Virgin Galactic.
Well, any of the SPAC stuff too, right? So much of that is
those are just
on 24, 25, 26 revenues.
How can you be a hero?
Yeah.
I mean, I listened to QuantumScape last night,
right?
US. And in another environment, we would be buying that stock aggressively because, Carl, they've got the better battery. And Phil LeBeau would tell you the better battery is a win. But in this environment, there's just another company that loses a lot of money. Oh, jeez.
Well, Jim, you mentioned Kathy Wood weighing in on inflation at the webinar yesterday. She said she'd be surprised if oil got to 70. It's really not that far away at this point. But she talked about the degree to which technology in particular will continue to add to the deflationary environment we've seen really for decades. Here's what
Kathy's made this argument multiple times that there are these two forms of inflation. Let's see if they play it.
Grapple with inflation. Now, we believe the odds of deflation have actually gone up in this period. A few reasons. The technologies and the innovation around which we have centered all of our research and investing is rife with examples of the deflationary undertows that the global economy is facing. Now, the kind of deflation we're talking about, this innovation-based deflation, that is very good deflation. It's associated with very strong unit growth.
So, Jim, the kinds of things she's talking about, you can obviously see in long-term trends on the cost of, say, financial services and payments. But she's also talking about a severe or a serious correction, she says, in commodity prices in the near term.
Right. Now, I know that there's been, ever since the Friday interview, different takes on what she says. Historically, she's right. I mean, we figured out. I sent a note to the CEO of QuantumScape saying, listen, is there a way to make batteries with less copper? I mean, right now, the EV batteries with copper. Is there a way to substitute aluminum? Remember when they substitute?
I'm gonna go pull down off Jim's QuantumScape talk here. Yeah, I mean, gosh, definitely higher than expected here. But the used car stuff, you know, I'm still stuck on when this supply chain shortage is going to end. You know what you should do? This is I would write this down. I'm gonna write it down. Yeah. All right. You want to track inflation? You got your biggest input revealed today. Track inflation, and then you write down Ford, GM, NEO, and read the earnings reports and the transcripts. That's, I think, where you're really going to see some of the fun. In fact, I'll go ahead and I'll pull one up. Let's do it together. Let's try it. Let's listen to this.
If you believe that inflation is peaking,
and if you believe in the growth prospects for many of these companies.
Right, but it's a brilliant analysis. It's been right.
Okay, so why not this be that opportunity? Which, by the way, it has been many times in the past when we've seen the bottom of the range, so to speak, or when
because
we've
I
seen
think
a bit of a blow up.
Well, as Clarida said, I mean, if the Fed is committed to its stance, then we're not done with these numbers. It's the first of the really bad numbers. And every time a number comes like this, you'll get a unity. By the way, just let's make it very clear. Lemonade was okay. Unity was good. Roblox was great. Now, if you take a look at Roblox, I had them on last night. That may be the fastest growing company in the universe right now. Yeah, and it's an extraordinary company.
Oh, by the way, before we see all this crazy hyperinflation, make sure that you use that 39% off coupon code down below before prices go up because of all the inflation. I mean, if we got all this big inflation, the prices are going to have to go up even more. But anyway, yeah, use that coupon code. Free play extended down below.
So, by the way, I know guys who are up dramatically.
I love them.
They run largely value-based portfolios.
Right. I love
and
those
it's been a really nice run, and they're happy to have it, and they could care less about the tiers of the growth guys who, you know, have had 6 down days or whatever it is.
Right. Well, I mean, when I was a hedge fund
16
manager,
down
Carl,
days.
I would just come in and say, okay, listen, we're going to own Phelps Dodge, which is Freeport, and we're going to own Reynolds Metals and Alcoa. And they would look, well, what else? No, Phelps Dodge, Reynolds Metals, Alcoa. And that's how you outperform. And then periodically you add something else. Maybe you throw in a steel company. But let's just not forget that when you get these periods, you're not thinking about Vizio. Palantir is not on your front burner. And Fubo TV, Carl, you're not making an exception for Fubo. You know?
Well, your point about
for us,
Roblox
nothing.
I mean, Roblox DAU's up 39, hours spent up 18 in April on really tough comps. Your point on Roblox.
Okay, I'm going to pull up the surprisingly a little easier for me to pull it. Well, let's see here. We'll get it on the iPad. I have the Ford earnings transcript here, earnings call transcript. So I've not looked at the Ford one yet. I've done this with a lot of different companies, but I haven't done Ford's yet. Ford earnings transcript. I don't know. Q1 2021. All right. Let's go ahead and take a peek. And let's go ahead and see what we have here. All right. So let's see. Okay, the $8 to $9 billion of guidance, excluding the semiconductor impact, that includes things like inflation and commodities and so forth. Doesn't include. Okay, maybe you could speak to that a little bit. All right, it might be worth kind of exploring this separately. Sometimes these are a little exhausting to run through. Okay, what do we have here? I would say we're definitely feeling the commodity headwind, as John said. And inflation, it feels like we're seeing inflation in a variety of parts of our industry in the kind of ways we haven't, oops, that's supposed to be a highlighter, in the kind of ways we haven't seen for many years. On the other hand, it feels like it's all due to a lot of one-timers as the economy comes out of lockdown. So I think it's a bit too early to declare the run rate of where it's going to be. It's just too hard to tell from my standpoint. I will note, based on your question, that many vehicles that are supposedly aging at Ford or normally would be aging are still relatively new. Super Duty is relatively new. Explorer is relatively new. The Escape, so on and so forth. Blah, 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 blah. Okay, that's very helpful. Thank you. Yeah, so, I mean, this is interesting. To me, this is, if you're worried about inflation, this is where you look. You look at places like this. You try to understand, what does Ford think? What do manufacturers think who are actually getting screwed by this? And this, to me, is very fascinating because you literally have the president and CEO of Ford going, yeah, we're seeing inflation, but golly, it certainly feels like it's due to a lot of one-timers as the economy comes out of lockdown, which obviously includes short-term supply chain issues, which we know they have a shortage. In fact, let's just type in the word shortage. Oh, yeah, you get a lot of results for shortage. My gosh. Okay, so we achieved the results in the midst of persistent global pandemic and an unprecedented supply shock tied to the global semiconductor shortage. Blah, blah, blah. Okay, higher prices resulted, benefit from an industry-wide imbalance of supply-demand given the semiconductor shortage. What else here? As we share the semiconductor shortage and the impact of production will get worse before it gets better. You know, it's interesting. What else do we have here? We have all before the okay, more of the same. Okay, strong flexibility, blah, 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 blah. Okay. All right. Oh, yeah, here we go. In total, we believe the shortage for this year will drive a loss of about $1.1 million in wholesale units, which translates to about 2.5 billion EBIT and a headwind. Basically bad. The chip shortage is sucking. Yeah. All right. Anyway, so you kind of get the idea here. But it's really, really interesting because when you have the CEO of Ford going, hey, you know, well, we're seeing inflation, but it certainly seems to be due to a lot of short-term impacts. It's all happening right now. We're getting to peak doo-doo. And peak doo-doo is you know, something that we kind of expect to last at least for another month. This month, next month. And so that's why I don't think, and we mentioned this, been pretty consistent about this, but pull this up right here. I don't think we're going to see good until at least July 13th. And the hope is that by July 13th, we start seeing an inflection to the downside with this inflation madness. That's what the hope is. So we're going to call this market open too. Market open, CPI, data, CPI. Well, I'll put inflation crisis. And big. All right, there we go. We'll change the title so that way we don't have to go to a different live stream. Okay, so yeah. Okay, let's listen to this. Is Biden going to hold a meeting on this or on what?
Somebody to help you.
Oops.
McCarthy a sense of an argument for their side of saying, look, we warned you that more federal spending would lead to higher inflation. We're now seeing that bear out. That's only after the $1.9 trillion coronavirus stimulus. And now you want to add that $4.4 trillion. Republicans have.
So then he goes, just think of lumber. Nobody thinks it's going to stay at these levels. It literally grows on trees. Yeah. I mean, a lot is just, we get screwed by transport. It's not necessarily just the lumber itself, but you get screwed by transportation too. The shipping has gotten ridiculous. So I mean, it's just everything together is pretty bad right now. All right, what do we got? We got Fox on commercial. Bloomberg's talking about Biden. CNBC's on commercial. Fine then, we'll go to the sticks and see how bad things really are here. So Tesla's really bouncing off the 600 level here multiple times. ARK down again. Let's go ahead and see what's up. Upstart's still running here, folks. Really incredible here. We've got Upstart actually moving. I mean, it barely had a hiccup here. We had a tiny little hiccup moment here on Upstart with the inflation readings, but Upstart just crushing it today. Keep in mind, Upstart is often, I'll hide myself there. Upstart's often used as a tool for traders. I do notice that a lot. So I wonder if Upstart is going to keep running today. I don't know. We'll see. I mean, we've seen it go to 220, 230 before. Let's go to the day chart here just to see it. Yeah. See, Upstart's been on a downtrend, but we've had other levels of support before. I mean, an insane run today. I mean, it's going from 89 to like 111. It's crazy. So we're plowing right past the 108 that we've drawn before. Next line might be around that 120, but again, we've gone into the 140s before, so we'll keep an eye on this. Let's see what else we have here. BTX is up 588. EA is up 1.69. Sundial up 4.66. Less of a movement here. Excuse me. Too early there. In the pre-market. Downside here really being Lemonade, Vuzi, Virgin Galactic, Cannabis ETF. I'm gonna go ahead and pull up what the scoop is as well with Lemonade earnings. But let's go ahead and go back here for a moment.
They should be brought in.
So are the bad guys.
Call them the cash.
It's just the bad guys get better.
No, the good guys have weapons too. Carl, the good guys, what they lack is a defense department that says, you know what? Let's play ball. I mean, the military's fantastic at cyber.
Well, it's the NSA.
Fantastic.
It's the NSA, really.
Okay, well, the NSA.
Yeah.
But they don't do it. I mean, they're like pitiful, helpless giants, to quote one of the great presidents of all time. Just kidding, Richard Nixon.
Well, Jim, it's clearly going to be a topic of discussion between the president and Putin in the coming months, we think. DOT did put out a statement today saying they're ready to receive waiver requests on the Jones Act. And then the energy secretary yesterday talked about the harmfulness of hoarding. Here's what she said.
Let me emphasize that much as there was no cause for, say, hoarding toilet paper at the beginning of the pandemic, there should be no cause for hoarding gasoline, especially in light of the fact that the pipeline should be substantially operational by the end of this week. And
should be. I'm gonna buy gas. Yeah, that's not gonna help. If you're like, hey, don't worry, the pipeline's gonna be back up tomorrow. We flip the switch tomorrow. That's different from, it should be fine. Don't worry. Don't go hoard gas. That'd be crazy. So we do have the 10-year Treasury almost knocking on the door of 1.66. This is these are some of the highest levels that we're getting to here. We have seen some of these before in recent periods here. We did run up to 1.74 in March, ran up to 1.72 in mid-March, one at the end of March, one at mid-March. Yeah, mid-March here. But this is definitely a nice push to the upside here on bond yields. Big push here. Break even, inflation expectations also moving up a good chunk. Let's see if we can zoom in a little bit. There we go. You definitely see the data release here, plowing these up. All right, let's see what Jimmy's got to say. Listen in to Jimmy.
That's cool. Call him during the break.
All right. Well, this break's coming up.
All right. He's right on a couple.
He's not hard to find, that's for
Wrong
sure,
on both.
guys. One more look at futures here. And the opening bell in 10 minutes.
It's actually not that bad. S&P down, 30 points or whatever. Okay, 100 something for the Dow. It could be way worse. It shows that a lot of this, a lot of this madness has been priced in. Thank you, by the way, to those of you retweeting my tweet about cars and trucks if you remove it. There were a couple folks that had additional questions that I thought were worth pointing out here. So this person, for example, says, I think it's insane they don't include commodity prices. Something to know about this is commodity prices are not included in consumer prices. So remember, CPI equals consumer prices. Commodities aren't what consumers buy. Like we don't buy copper as a user. Now, if you go build stuff, or you're going to go build stuff in your backyard, that's different, right? But the typical consumer doesn't run around buying bushels of wheat and commodities. So that's why you don't track CPI there. That does show up in input costs or like in the end result, though, eventually. Like, for example, consumers buy bread in the store, not wheat from the farm. Producer price index, it shows some things. So sometimes we see a producer price index come in a little higher earlier. But really, you could just look up this thing called the JOC commodities index. And this sort of tracks commodities over time. I'm not a big commodities trader or person, but yeah, that could be a reason you don't see that here. But yeah, used cars and trucks, those are things that people are buying. And that's why if you just take out used cars and trucks, you see this insane change in really what inflation would look like. And it goes to show that, at least in my opinion, when you have one thing that's making up such a massive portion of an impact in the CPI, a third of the impact coming from used cars and used trucks, when that resolves itself, well, you see a massive shift potentially to the downside. I mean, imagine if we get used cars and trucks in December falling 5% or whatever. Well, you're going to see inflation inflect to the downside substantially quickly. And I think, and this is just my belief, but my belief is when we see something like, or imagine, just to be extreme, okay, just to make the numbers easier, imagine December comes around and used car prices go down 10% on a month-to-month basis. And all of a sudden they pull inflation down, 1.2% on top of whatever inflation has already settled down to. So year over year inflation in December, let's say it's 2%. And then all of a sudden you get used car prices that are negative 10% in December because whatever, the used car market settles down. People got the used cars they needed, chip shortage, whatever ends, whatever, right? Now you're expecting 2% in December on a year over year read, but used cars are down 10%. So you actually get a reading of year over year 0.8%. And people are like, oh my gosh, what happened? All the inflation that was here this summer is gone. Well, yeah, it's because one thing just weighted it down like an anchor, down 10%, or if they have that similar third of an impact, you'll see the same thing happen in reverse. This is why I in my opinion, I'm not a madman. I'm trying to be very, very transparent that until you get that U-turn, you're going to have crap in the market. And I think you start seeing the uncrapping of inflation in September and October. But until then, it's going to be crap. Anyway, back to the crap. Okay, Bloomberg's on commercial, so we'll listen to Jim and his paper.
Tell our viewers I have a very keen sense for the obvious.
Anyway, I mean, look, I think this is you want a Dow stock to own for the CPI. Bingo. By the way, the products, best in show.
There you go. Yeah. Speaking of the CPI, we'll get a chance to see how the market actually reacts. We've seen a lot of pre-market moves. You can see them right there behind me. The open is coming up after this.
Yeah, somebody's saying that the used cars thing is a leading indicator. I mean, look, cars have been there's been such a shortage of cars. I don't know that we can call it a leading indicator. I think it's just a disaster indicator of what's going on right now because people need vehicles and used car prices are skyrocketing. I mean, People are literally getting paid more money than what they bought a car for a year or 2 or 3 years ago. It's like, all right, I'm done with my used car. You bring it in now, psh, you're making money turning in a car right now. It's so insane.
Coming down to 120.11. Dollar yen breaking out. Bit of dollar strength off the back of those higher yields. And talking about inflation, crude right now 65.72, advancing about 0.7%. That's the price action. Let's get you some morning calls. First up, a call coming from Berenberg, upgrading DraftKings to a hold with a 42 to 50 price target. The analyst seeing limited downside after shedding 40% from its record high back in March. That stock is down 1.45%. Your second call from RBC, downgrading Dollar General to Sexta Perform. The analyst expecting a challenging environment with inflation boosting food and gasoline prices. That's down 1.83%. And I had a feeling that my producer might do this. JP Morgan downgrading Ferro to underweight after agreeing to be acquired by Prince International. The analyst seeing minimal upside given the company's inconsistent cash flow. Interesting choice of words there. Coming up, stocks looking less and less attractive relative to bonds. That conversation still ahead with bond yields breaking out and inflation expectations picking up off the back of a big upside surprise on your equity market. BTIG.
Let's go ahead and pull off this for a moment. I want to show the dollar. The dollar was a little volatile. I don't know if I can get my, all right, whatever. Market, watch, a dollar. Let's see if we can get the dollar up here. There we go. It jumped right when inflation data came out, when CPI data came out, but now it's actually down below. So kind of weird. Usually, or down below what it was right before. Usually what happens when yields go up, the dollar goes up. Like that's the normal way of things. The normal way of things is when we start getting more money that bonds are able to print, you know, 10-year bond. Once this goes up more people from around the world are interested in buying. Look at this skyrocket though. I mean, it is just going up, up, up. Here, let's go to the day to make this a little larger here. There we go. Look at this. We shot up on news of the report. And you'd think usually it would settle down a little bit again. Oh, no. I mean, we are just on like a roller coaster chain climbing up right now. You're getting ready for a wild ride. It's crazy. Shut down new car production. Used car prices will go up. Yep. Somebody here says, my Subaru is literally worth more traded in than I paid for it. I've put 8K miles on it the last year. Yup. My wife just hit a deer. I'm going to turn the car in instead of fixing it. We can work out a better deal. Oh my gosh. Probably, honestly. Sorry for the deer. Hopefully your wife's okay. Depending on the speed, this could be pretty bad. I made $2,000 on my Subaru Outback 08. It's crazy, huh? Let's see. Well, yeah, no kidding. Sorry about what's going on in Israel. Thank you for watching, by the way, from Israel. All right, so let's go ahead and take a peek at what's going on. Graham's Volvo. Yeah, probably sell that around right now and make a profit. All right, let's go ahead and gosh, the 10-year, it's not abating. Look at that. Just keeps going up, up. Probably going to 170. And we're going to, I would imagine here, see some pain in tech as we open up here. This is, to me, you're going to get some more juicy discounts. I am so tempted to pick up some more of these discounts here. And I probably will. Did yesterday. Probably will today again. All right, folks. We are 30 seconds away from the opening bell. If you are just now joining, I want to remind you to check out my tweet, because on Twitter, I give you a breakdown of what happened with inflation. And I do give you a breakdown of what would happen if you remove used cars and trucks from the equation. You actually get inflation that's not as miserable as it seems. We have the opening bell now. We do have bonds going up like crazy. Let's go ahead and see how the market actually reacts to inflation. Pre-market's not always the best. Let's see.
African Americans. And the Federal Reserve Chairman agrees with you, Jim.
Yes. JP Morgan.
There's the opening bell. NYC
You see that? That's a bet
Yep,
that the Fed
and
is going
NASDAQ.
to break.
That's going to be what to watch, Jim, here as we get our opening.
All right, Bitcoin is falling. Let's go ahead and jump over the sticks right away. Let's see what the heck is going on here. So looks like we've got, what am I on right now? I'm on Penn National Gaming rotating to the downside. We have Bitcoin rotating to the downside. We have Twilio dropping. Roblox dropping. Snowflake dropping. QuantumScape down 9.17%. You actually have Tesla green candle. What? Churchill Capital green candling. ARK green. Beyond Meat. Not sure what it's going to do yet. Apple. Also not sure what it's going to do yet here. What else do we have here? Nordstrom. Trying to figure it out. Looks like it fell a little bit going into the open there. Doge falling. We've got Sundial running nicely here. Upstart continuing its run so far. Up 28% here on the open at Upstart. This can oftentimes be a trader stock, so keep an eye on it. And if it is a trader stock, red candlesticks get enhanced. So be careful. We've got Social Capital up a couple percent here. Nice little green candle here. TTCF 0.65. Woo! I didn't get any coffee. I got to get some coffee. This is crazy. Pfizer, kind of flat. Lemonade got destroyed. Is getting destroyed. It's down 10%. QuantumScape, it's crazy. I remember saying last year, I like Lemonade under 60. And we were buying it at like 49, like 55. And it went up to 80, which I think around 80 is like fair pricing for it. And that was cool. But then Motley Fool pumped it and it went to 180. And I'm like, yeah, no. Do not buy. Do not buy Lemonade at these levels. Yeah, that Motley Fool pump was insane. Because it ran up in like a matter of 2 weeks. It like tripled. It was totally nuts. But yeah. QuantumScape now down 6.25%. Vuzi 5.6%. Roblox giving up some of those numbers from yesterday. Trying to see how the market's really responding here. Palantir obviously had a great day yesterday, but we're getting some solid red candles here. Bitcoin, I mean, it's just weird. Bitcoin going down on this. See, like, that could actually ironically be a good thing for Bitcoin because, okay. All right, this is a mind trip, what I'm about to say, okay? But what if, and this is what I expect, all right, we get inflation data rotate down because we are going to get that rotating down at some point. Inflation data is going to rotate down. We get it rotating down in, say, September, October, November, December, right? We get this rotation down in inflation data. If Bitcoin is directly correlated to inflation data and inflation starts plummeting, then you would expect Bitcoin to plummet. But if Bitcoin doesn't react that badly off higher inflation data by not going up, then maybe you don't expect it to plummet as badly. It could actually be a good thing for Bitcoin. That's kind of good. Wow, somebody donated 50 Canadian dollars to say hi. Please say hi. Hi. Oh, well, thank you. All right. So Enphase is going green, says someone? No way. It's just it is just the most entertaining market ever because you just don't know what you're gonna get. It's like a box of chocolates. Tesla's rotating. Wait, yeah, Tesla's going go green as well. This is so stupid. Yeah, wow. Whatever. Really incredible. Let's see here. Upstart. Ooh, Upstart red candling. See, I said, well, as soon as this is the thing about trade. Okay, you got to know this, all right? You got to know this. 50 loonies. As soon as you see a tiny little bit of red on a trader stock, you oftentimes see a lot of red. We saw the same thing happen at Coinbase. The second we saw a little bit of red. And I even saw it as we were covering it live. I go, uh-oh, starting to see a little bit of red. The traders are probably going to rotate out now. Thing tumbles. It was hilarious. So when something is trader heavy, expect this. Okay, this is something you should come to learn. Yeah, TTCF up 2% now. Yeah. Lemonade's getting wrecked here. I got to pull up the earnings to see what happened. Lemonade has always been one of those that it's gonna be a while before you see Lemonade like really profitable, because it's a low margin tool. Such a great company, but insurance is not a business I want like massive exposure to. But yeah, Lemonade will be here to stay, but it's gonna go through its volatility. Redfin down 2.8%. Not really seeing the love here. Palantir's not seeing the love. Roblox, Snowflake, they're not really seeing the love either. Maybe you're seeing cars move because of and Enphase. I don't know. Let's see here. You see EXPI is not really seeing the love either right now. But maybe you're seeing cars and energy move because of the pipeline. You know? Maybe that's why you're seeing these move to the upside. The energy market's obviously shaken. Let's take a look if NEO's following pattern. Yeah, NEO's getting a little bit of red here. NEO's sitting at 34. Oh, goodness gracious. This feels like a bargain. Let's see Tesla again here. Yeah, look at the Tesla recovery. It's crazy. All right, let's take a peek over here. Let's listen into SoftBank. What you got over here?
Right? It's Break Powell.
Break Powell.
Break Powell.
Got it. Break Powell.
And then Caterpillar, because it's Cashapillar. Cashapillar.
You like that?
Wall Street. What passes for Wall Street humor is really, they should go.
It's terrible.
Just terrible. They should go to Caroline's. Try that stuff.
Reason they're analysts, not comedians.
Carl, they should just stay on.
Yeah.
Don't try.
You're right though, Jim. Goldman, Caterpillar, JP Morgan, top performing names on the Dow right now. You know what some, Jim, are drilling down on in terms of the CPI number are used cars as the real locus of inflation within the print, which I guess Pantheon Macro, for example, today is trying to game it out and say, we're all going back to work, but we're not all going to take public transportation, or we're going to want that second car. And outside of the COVID-sensitive transportation components, they argue it's relatively benign.
Well, it's terrible. Let's take the example of the F-150, which is that's the truck for small and medium-sized business. There are places in the country where you literally, the cars that are on those warehouse lots, where they do the giant auctions, the F-150 selling through new prices. To get an F-150 that's 2 years old right now, when you need one, you can pay through a sticker price from another part of the region. It is not right. The used car is not something that billionaires buy. It's something that you use when you're trying to expand a small to medium-sized business. Now that will stop when Ford, I think, goes into full production. We'll see their electric vehicles. They can go in full production. The Japanese plant is back online. The Renesas plant, Taiwan Semi is probably 60%. But the fact is, Carl, you raise a point of who's getting hurt. And in this particular case, you need that vehicle for small to medium-sized business expansion. So that's just a mistaken policy or a shortage of semiconductors, Carl. You can say either one.
Yeah. I don't know if you noticed BMW said today that they expect at least half of global sales to be fully electric by 2030. And that they'll deliver 100,000 of those next year.
Now, a lot of people feel that Volkswagen's got this tie-in with Jagdeep Singh, and which is QuantumScape. Remember,
all right, we're going to go ahead and pull off this. Let's go ahead and take a peek over here again. Take a look at this. So here's our 10-year. I mean, really, really incredible. I mean, we had the boost when the data came out, right? But you've really seen this ratcheting up all the way to 1.67. Not as high as it has been at other parts of the year. We've definitely been higher in this year here, 2021, when we hit 1.74 and 1.72 in mid to late March. We've got 10-year break-even expectations actually coming back down again. And this is an interesting tool because this is what folks use for inflation expectations. And you kind of saw leading up to the report, expectations go down, skyrocket after this. Now it's almost like maybe people are digesting the data a little bit. And we're seeing those inflation expectations maybe come back to normal. Again, the big thing to digest in the inflation data is the fact that used cars made up a third of this increase. That's one piece making up a massive chunk. But anyway, Tesla rotating now to the downside. Had some green candlesticks since the open here. Now rotating to the downside. We do have Upstart rotating to the downside still. Fubo TV rotating to the downside. Ocugen. Nice rally here. Kind of straight up on Ocu. Very nice. Good volume pump right here too. Social Capital up 1%. Coinbase is at 305, up 0.66%. Tattooed Chef 0.18. What else do we have here? We got Lemonade just getting destroyed. This is actually a. Let's go ahead and look at Lemonade. I'll pull up Lemonade. Okay, give me a second. Let me get this up.
When it gets too high, they can't hide. Carl, don't at a certain point, Carl. Copper is not Microsoft.
No, and that'll be a story for us eventually, as it has been in prior cycles.
Yes, it has.
Scrap metal becoming a market all by itself. So we're down 146 on the Dow. VIX back to 23. Let's get to our Bob Pisani. Good morning, Bob.
Good morning, guys. A little bit of up and down. 41.21 was the low print so far, right at the open. That's exactly what happened yesterday, the low print. But it's been a little wobbly here, so we moved back down a little bit. Still 41.21. Commodities in play. Oil's at a new high. Take a look at the sectors here. Energy is really leading. Of course, you see crude here up, sitting essentially at new highs. I think that's driving all those energy stocks higher. But tech's still sliding here. Mega caps down about 1%, mostly on the big semis and Apple, Amazon. Energy's sitting there at close to a new high, as you see with the oil up here. Banks doing very well and a slight increase in the interest rates. Utilities not doing much. Steel's down. That's very interesting. So you think, God, you concerns about inflation? You might as well play commodities. But this has been played out a little bit. I think that's a major problem that we've got. So here's what we are with the markets right now. This is why inflation has become such a big story here. The Fed has been the major driver of the rally. Liquidity and, of course, around the stimulus as well. The Fed, though, it seems very clear, has been more focused on employment over inflation. I think that's a fair characterization. The market risk right now is that the Fed is wrong about that the Fed is wrong about the timing of rate hikes and the asset and the tapering, and that we're going to be forced to start talking about this possibly tapering in Jackson Hole. It's not going to be 2 years before a first rate hike. It's going to happen before. That's the market risk right now. So people are trying to figure out portfolio diversification. What should you do? Obviously.
All right, let's go ahead and pull down a little bit here. So I want to just give the Lemonade earnings here. So Lemonade Q1 loss per share came in at 81 cents versus expectations of 60 cents. So that is a greater loss than expected. Their revenue actually beat. So they beat on the top line, but they missed on the bottom line. The top line came in at 23.5 million of revenue versus an estimate of 22.6. They also forecast revenue of 117 to 120 million. That is beating expectations of 114 to 117 for the year in the forecast. So that's good. It's really the bottom line that missed here on adjusted, it looks like. Yeah, the loss per share. So, but it, yeah, okay, sets guidance, beats on revenue, sets guidance above consensus. I think it's really just that bottom line number. Yeah, Q1 loss comes in wider than expected. That's it. It's literally selling off because of a Q1 rise in expenses. Yeah. Wow. It's a big sell-off just for that. We'll have to get the earnings call transcript, because that does seem like almost a little excessive, which I think I have. Let's see if we can get it. Oh, yeah, I have it. There we go. Not that we, only want to sit here and look at the earnings call. But you know what you could do is look at the questions here. Analyst, what extent are you planning on expanding TAM? No material changes in average price, no changes. We've got, okay, what else do we have here? Daniel, the CEO, we interviewed him here on the channel. He's great. Combination of folks who are first-time buyers and pet insurance. All right, what else here? Okay, so I'm looking for people digging into the questions. Analyst. Margin impact from investments. No, not giving guidance here. Okay. From regulatory perspective, boring. Also, I'll talk about auto insurance, blah, blah, blah. Oh, somebody talk about the bottom freaking line, will ya? Okay. Auto. Everybody wants to know about the auto pricing. I think I'll have to dig into this a little bit deeper later because I'm just not seeing the questions. Oh, let's see. Okay, that's the thing. It's okay. Wish a couple times. Okay, marketing efficiency, blah blah blah. Okay, I'll have to dig through this a little bit later as to why. Well, I might do that right after this live stream. I want to figure out why the bottom line missed. So I'll read this in detail because the quick little skim here is not doing anyone justice. But we are, it is recovering a little bit here, bouncing off 62 as a low here. But I'm going to pay attention to that. So what else do we have here? Let's go to this setup here. There we go. Upstart recovering again a little bit as well. Fubo TV also recovering a little bit. We have, what else? Let's see. Workhorse trying to recover a bit. Xpeng. A lot of the EVs trying to recover today. Although Tesla is still down, I believe. Peloton's at 91. Let's go ahead and look at Tesla here. Pull Tesla. Whoa, Tesla's about to go positive. Whoa, look at that. That's nuts. Tesla just went positive. We just saw it happen. 618. It's madness. It's just crazy. It's such a weird market. Best investments of 2021. Used vehicles, plywood, gas, ammo, and ham. I'm going to invest in a 12-pack of beer. Oh, dear. You know, I talked about, somebody's like, well, why didn't you tell us to shift our stocks to something else? Well, I talked about this inflation madness coming in January and December. I didn't rotate out of well, I did sell in March. I'm sorry, in February. And I told course members I was selling specifically because I thought there was going to be some of this volatility. I have to say, I didn't think it was going to be this bad. So I did sell in February. On February 9th and February 16th, I sold a chunk to reduce about 20% margin, which was really good. Maybe it was like 10 to 15%. I don't know, remember exactly. But I sold a chunk, and that was really, you know, leading into CPI data for which I thought would have started having an impact in March. It actually started having an impact in February. But anyway, kind of expected there to be volatility. I did not expect it to be this bad, I will say. However, my plan was, because I didn't expect it to be this bad, my plan was just to ride it and buy the dip. The dip has been much more severe than expected. So it's definitely created a deeper and longer dip period than expected. I was expecting maybe 2 months of ouchies, but not this deep either. You know, maybe 10-15% off tech. Some techs are down, you know, 30-35% tech strategies. So definitely much deeper than expected. So that's why I didn't rotate. I don't know that I would have either, though, if I expected a deeper dip, which is what we ended up getting. I just like using the extra money that I have to buy. Every time I get paid, buy. It's you know, it sometimes means you go through some pain, but that's that the pain is what sets up the big gains. All right, you go through the red, and you buy through when it's unpopular to buy, that's usually where when people look back a year or two later, they're like, "Oh man, you were buying then? That's you got so lucky." That's usually what they end up saying. So doesn't matter to me. I am, you look at it as paycheck adding. That's the plan. All right. So what do you got? Dogecoin 49. No real movement there on Doge. It's not true that only a YouTuber can do that. It's the same thing that we talk about all the time. It's when you invest, in my opinion, your goal is to be as invested as possible. We talk about this at length in the Stocks and Psychology of Money group. We go into much more detail with Psych. But really, I mean, if you think about it, your goal is to be, as a long-run investor, your goal is to be invested. Your goal is to be in the market. And as you get paid, you add. That's the goal. Usually sitting on the side and trying to time, especially with your entire portfolio, trying to time the market perfectly, you're more likely to get reamed than you are to consistently win, to try to be perfect about what the market's going to do. So you got to be careful with that. Bitcoin finally rotating back up. Finally. And this is, Bitcoin did get down, actually broke down below 56,000 for a moment. And now finally rotating back up. It's interesting it took so long for it to rotate up here. Let's go look at Tesla here. Tesla rotating back to the downside. Did go green here for a moment. Hit 618, 619 there for a moment. Down about 1/3% again now. In fact, they're talking about Tesla here. Let's take a listen in here.
By the way, by our capital markets, this goes back to a point
Neo
you've been making.
I know, but this is my Navarro
off.
Where's
but from
Peter?
our capital
Jesus.
markets, not to mention, of course, state support as well. And the question is, do they actually become real players? Can they dominate?
Can they dominate? Well, that was a very good article in the Times.
Yeah, yesterday.
I love that. The Times has been doing some very big takeout pieces. They're excellent.
Yep.
All right, guys. There's a look at Tesla 616. We're back in a moment. Don't go anywhere.
Before we talk about tax smart investing, what's new?
Well, Audrey's expecting.
Twins.
And parents.
We want to put money aside for them.
Let's give Fox a shot here.
As it turned out, I didn't need a lawyer.
Man, they all go on commercial at the same time. Oh, here we go.
They're likely underperformers in the weeks to come.
Julian, thank you, sir. Julian Emmanuel there of BCIG. Thank you very much. Jack Caffrey of JP Morgan Asset Management. Your equity market's lower. Your bond market's lower too. Yields are higher by 6 basis points on a 5-year through the belly of the curve. That's where the most weakness is right now. 10-year yield up 5 basis points to 167. But a sector price action. Here's Abby.
John, yields up, helping the banks, and energy is the best sector on the day, climbing with oil. But those are the only two sectors higher on the day. If we go into the Bloomberg terminal and take a look at the IMAP, we are going to see overall there's a risk-off tone. Most sectors are lower, 9 out of 11. Energy and financials, again, higher. But on bottom, it's all about tech and the mega cap internet stocks down. Now, if we take a look at the last week, we are going to see that is the theme. The cyclical sectors are up top. Financials and energy on bottom. You can see technology. This is also the theme on the year. If you can believe it, John, on the year, technology is up slightly, up about 2%, but it is the worst of the S&P 500's 11 sector, financials and energy up top. So we still have that cyclical theme going, tech lower. Let's see whether or not tech turns red on the year. That will really create a stir.
Abby, thank you. Coming up, the trading diary from New York. This is Bloomberg.
All go on. I'll go on commercial at the same time. It's classic. I had the wrong screen up. Sorry about that. I was playing Bloomberg, but I had Fox over here. My bad. All right. Let's take a peek at the sticks here for a moment. Let's see how things are moving. So let's hop on over here. All righty here. So we actually got a whole lot more green all of a sudden. Let's go ahead into the ones on the watch list here. Upstart and Fubu really holding on here, although they're kind of vacillating. Got Sundial, Akku a little red here. You do have green. It's not a lot. You do have Li Auto all of a sudden bouncing 7%. That came out of nowhere. I wonder how that's going to fare for like a Neo. Let's go ahead and pull Neo here. Neo is, Neo's up about 1/3. And Tesla's down about 0.2, kind of trying to grow green here. Tesla trying to go green. Yeah, and then you do have a lot of down 2-3% over here with Bitcoin finally recovering, giving up a little tiny little bit here after itself, which is so weird. Let's listen to Fox for a moment. Let's give him a shot.
37 million Americans expected to travel somehow, either by air or by car. And the Colonial Pipeline, they say that they expect to have it fixed and substantially operational by the end of this week. But you have to remember, it's going to take another 15 to 18 days for that fuel to flow from Texas, where the pipeline starts, all the way to the end of it in New York. So we could see impacts for days and weeks ahead. Ash?
We certainly could. All right, Grady Trimble at O'Hare. Grady, thank you very much. And by the way, the governor of Georgia...
Let's hop on this way.
Buy the whole... I really didn't like it. It just, well,
Yeah.
they just were... they really just... I'm not sure it was buy the hold. I just know when I read it, I said, wow, this stock is going to get hammered. Not yet.
Yep. Definitely discouraging, Jim, especially after we got some indication earlier in the week that they might have a combo shot for COVID and flu, but we'll watch that. We never got to Wendy's and their raised guidance. I know you got them tonight.
Yeah, look, Todd Pettigrew is really, man, this is not just because of my wife's voracious eating of the Baconator, David. The double Baconator she's had, and I actually put it on Twitter.
Ooh.
Yeah, I know that she wasn't happy with that.
No.
But Todd Pettigrew's done a fantastic job. Win, and we got to talk about this interactive deal they did with Bill Foley, another Spackaroonie McFatty guy, David.
He is
and then
he's a moneymaker.
He's a
That's what his people say.
Yes, and then you went to set stock that has been up, led the S&P, Carl, for two straight days. Norton LifeLock, are you protected? We'll have them on. What?
Jim, we'll see at 6.
Snickering. I want an anti-sticker thing. Wear a mask.
That's not
Don't
gonna
know your stick. Put your mask on inside. CDC's in favor.
All right, let's go ahead and pull down here. Let's see what we got. Maybe we got a couple questions here. Can I start making Kevin for governor buttons? That's cool. Somebody says Palantir's getting hammered. Let's see here. What we got here. Palantir. Let's take a peek. Palantir is down about 5.59%. Yeah, definitely. Let's see. While I wait for Tesla 400 to buy that dip. Oh man, Zezima here. Can you cover the shift earnings? Shift earnings or later today, right? Yeah, I've been happy to cover that, of course. So let's see. What else do you have here? All the big money sells out at the same times. Yeah. All right. I think that's pretty good for now. I would say, hey, thanks so much for being here. Follow me on Twitter at RealMeatKevin. Use that coupon code link down below to get 39% off before inflation comes in and raises that price way more than usual. Yeah, go to the link down below, metkevin.com/join. Use that coupon code to the moon. And folks, see you in the next one. Thanks for being here.